Ed boy.
YouTube gang. What's good with y'all, man? Hope everybody doing good. Coming back at you with another weekly video. Well, not a weekly, but more so of like a review video. But I just want to kind of go over, few trades that occurred this week. I ain't gonna waste no time. No, we're gonna go ahead and we're gonna jump right into it for the game. So as you can see right here, daily chart. ICT was mentioning this. We are inside of this dealing range from this high right here to this low right here. Price seems to be heading for these somewhat equal highs right here. It can go either way. Price can go either way here. You definitely want to pay attention to your trades. You want to have good proper management, risk management, all that good stuff. But I want to take you into what I was seeing on Friday. ICT already mentioned this, but if you look here on Friday, you can see that I have looks like a 1 hour, well actually no, I'm sorry, it's a 15-minute imbalance, but it's also a 1 hour imbalance. If you look on the 1 hour right here, you can clearly see this imbalance right here. But I just broke it down to the 15-minute. You can see it right here. And into Friday's trading. As you know, last week was NFP week. Now I'm not really good at trading like NFP Friday. I tend to not trade after Wednesday on NFP week unless the setup is really good. I'm still a developing ICT student, so it's best for me to stay out of those type of trades during NFP, just to sit back and observe, see if it's going to hit a point of interest or it's going to do what I normally expected or what I want it to do. You know what I mean? So with that being said, let me bring up the side-by-side chart. And also you can see the same thing happening on Nasdaq right here, same time frame. Well, this is the hour, I'm sorry, let me change it to the 15-minute. But as you can see, it's pretty much the same thing here that occurred, but I'm going to show you really quickly what I look for when it comes to this trading. Now, if you watched the last video before this one, you can see that I added an ICT concept called SMT Divergence. And if you see right here, you really don't see any SMT Divergence, but I'm going to take you into the lower time frame in a minute. But one thing that I forgot to mention in the last video about SMT Divergence is that you definitely want to have a point of interest, or like you want to wait until it hits like an area of interest that's interesting you. Like trading SMT Divergence blind, it can be very misleading. You definitely want to have try to have at least like a daily bias, or you want to have a point of interest to hit. So therefore, just like here, if you have an imbalance that you have your eye on, or you think that it's like a point of interest for you, or you think that price will come back down to that level, you definitely want to mark it out and see if you get some SMT Divergence in that area. So normally what I do is I compare the S&P with the Nasdaq, or you can do it with the Dow. I don't see people trade the Dow a lot, but you can do it with the Dow as well. I'm sticking to S&P for now until I get a little bit more comfortable trading, but you can do SMT Divergence with the Dow if you so like. So now let me take you into this into the lower time frame here. As you can see, same setup, same concept. If you look here on Nasdaq, look around the same time, you can see that you have the setup of a higher high, not a higher high, a higher low. I'm sorry. You see that you have the higher low set up, so you don't. There's no, as of right now, you can see that price is pretty much moving the same. But if you bring it down to the 1 minute chart, you're going to see something. I'm going to take you inside to show you something, which is why I like divergence, which is why I like SMT divergence, I should say. If I can locate it, if I'm not mistaken, I should have marked it up earlier. Oh yeah, sorry, I got it. So if you look right here, you guys can see that you have a low, then the lower low right here. But if you look right here on the Nasdaq, you have a low but a higher low right here. So what does that show you? It shows you the strength is with Nasdaq. Nasdaq is the relative strength leader, as Michael aka ICT would say, and you will want to be in the Nasdaq when it comes to trading. So this is what I wanted to show. This is what I added to my arsenal when it comes to trading with this concept. SMT divergence is very, very powerful. This is the one thing that I add, the one thing that I can easily see and spot, as long as I have a point of interest, or if I wait for it to take out liquidity in some form, like if it takes out sell side or buy side. That is normally what I look for. I want to see divergence. It's not the only thing that I look for, but it is one of the key things that I look for, because it's something that I can easily tell. I can tell who is the relative strength leader. I can tell if it's either going to be S&P or is it going to be Nasdaq. Now, that doesn't necessarily mean that if Nasdaq is the relative strength leader, you don't have to trade the S&P. You can, but when it comes to this, I tend to trade the one that has the relative strength leader, which would be Nasdaq in this case. So that's just something I forgot to mention in the last video. Like this is something that's very, very powerful. You definitely want to use if you have trouble trying to decide, which one do you want to trade, either the Nasdaq or the S&P. I recommend using this and having your chart side by side so that you can compare what's going on with price. And this is just something that's very powerful for me, that I love, that I've added to my arsenal thanks to ICT, and it's worked out wonders for me. I did not trade Friday. I believe my last trade was on either Tuesday or Wednesday of this week. I can't remember if I was trading Nasdaq or if I was trading the S&P. I was probably trading both. Oh yeah. So if I bring you back here, looks like this was earlier this week. I think I've already shown this trade in my previous video, but it's okay, I'll show it again. Now you're probably wondering what's all this noise in here right here. These are all executions. I was just trying to blow the account. I was trying to challenge myself, so I wanted to try to bring the account down to a certain price, although I could have just reset the account and just brought it down to a certain price and did it that way. But either way, that's what this noise is right here. But as you can see, it also works with a break of structure. As you can see right here, this was the buy side liquidity that was taken out. It did not. Right here was where my entry would have been. So what do you have? Well, let me just make this a single for you guys so that you can see better. So right here, I had a buy side liquidity marked up right here, which was a target for me that day, which was July 6th. As you can see, once it tapped into here, I really didn't enter, because it really didn't catch my eye until it got about right here. And then had I, kind of waited, see if this was probably the interested area for me right here, but this wasn't really enough for me. I didn't like how this looked, so I didn't enter when price came back into this area. But right here we had got what we wanted. We got that fair value gap entry, as you can see right here. I did enter a little bit late, but the thing is with this fair value gap entry, if you can get in on the candle that taps into the fair value gap, I believe that you're still in on the you still get a good entry, which is good. Like I say, this is really about a lot about risk management. But as you can see, I got in at 38.41. I took profit a little too early, which I should not have done, but took profit off up under here. This was one of my take profits. I wanted to wait till I at least got to here, which was a mistake of mine, but that's okay. But as you can see, I sold two lots right here. I took one off early right here, and then I waited until price got up underneath these lows on this candle. I accidentally took it late again, which was a mistake, but that's okay, because like I say, this was my entry right here where I was trying to enter, and this was a target. I had this target marked out as a projected target. It did end up reaching this target had I held, but I was okay with where I was right now. I still have to learn how to hold my trades, but entries was a key thing that I was working on. And yeah, that's basically it. I really just wanted to show how powerful this divergence, SMT divergence stuff is. It's very powerful. If you use it in its proper context, you definitely want to use it in its proper context. And I'm going to show it to you just one more time for you. So basically what you want to do, you definitely want to have a point of interest. You want to have a point of interest, and you want to wait for some form of a liquidity, some form of price to take out liquidity, meaning you want it to take out buy side liquidity or sell side liquidity. And you just want to see who is going to be the relative strength leader. Like I say, you can do this with the Dow and compare it to the Nasdaq, or you can do this with the S&P and compare it to the Nasdaq. Like I said, I'm sticking to the S&P. So basically what you want to do is see who is the relative strength leader. In this case, it would be Nasdaq. As far as entry, you can you can use an optimal trade entry with your Fibonacci. It's whatever you want, or you could wait for a fair value gap entry. An optimal trade entry here doesn't necessarily work, but you are underneath that 50%, so this would have been your entry candle right here once it dipped under that 50%, or to make sure that or you can just mark out this area for the 62 to 79% retracement level to try to get in. Probably would have missed entry here, but nonetheless, that's one way to set it up. The other, it's a very if you don't see it, it's a very small fair value gap right here. You have one right here. It's very, very small. You can use this as your entry point, because we did get that shift in that market structure, and a very, very small fair value gap here, entry here. And then you take your profits up here. You got to take profit. You can take your partials right here, whatever you decide to target. But hopefully the SMT Divergence video did kind of help you. Like I said, this is one of the things that I'm going to be using moving forward from now on, and hopefully it helps you out in some way. If I explained this well, go ahead and leave a like on the video, or if you have any questions about how it works, just leave a a comment in the comment section. I could try to answer any questions that you may have. Other than that, guys, that's all I have for you today. Take care, good luck and good trading this week, and I'll catch you in the next video.